Hello everyone, it's great to have your company here on Kalkine TV. I'm Rachel and you're watching The Buzzing Trends. In today's show, we'll be looking at 5 ASX blue chip stocks with fully franked dividends. Investors looking forward to reliable and safe investment tend to bat for established companies that are more financially resilient against market downturns. On this account, blue chip stocks over the years have remained on investors' radars, eyeing low-risk portfolios along with consistent income streams in the form of dividend income. Blue chip stocks are highly esteemed companies that are typically well established and command strong market control. Besides their stability, blue chip stocks often tend to provide dividends to their shareholders out of their profits. And what's more, many such blue stocks on the Australian Stock Exchange also offer fully franked dividends, which eliminates the double taxation of dividends for shareholders. That's why the blue chip shares with fully franked dividends have emerged as one of the preferred investment options as investors have increased their quest for the best of all worlds in the financial market. So given this backdrop, let's look at 5 ASX blue chip stocks with a fully franked dividend. Global resources company, the BHP Group, is among one of the world's top producers of commodities such as iron ore, metallurgical coal and copper. The company also has established interests in oil, gas and energy coal. Whilst the iron ore price has seen a recent fall, it's now stabilised somewhat, and experts believe that the strong coal prices are helping limit the damage of the iron price drop. BHP recently gave a presentation to investors about its Jansen Potash project. The resources giant said that it's an attractive, future-facing commodity. The mining giant says it's a global trend with a low-emission, biosphere-friendly fertiliser. BHP says that potash has attractive fundamentals. It's a supply-driven market with a reliable base demand and attractive upside. BHP says potash is not strongly correlated with broader economic and commodity cycles. This potash project will increase BHP's diversification of commodity, customer base and also its operating footprint. It's a long-life asset in a stable mining jurisdiction. Potash also provides a platform for growth through potential capital-efficient expansions. The company delivered excellent financial results in financial year 2021, and its profit from operations increased by 80%, while its net debt decreased 66%. The company produced 1,635.7 thousand tonnes of copper and 89,000 tonnes of nickel in financial year 2021. During the period, iron ore production was 253.5 million tonnes and metallurgical coal production was 40.6 million tonnes. The total fully franked dividend per share paid by the BHP Group for the year stood at $3.01, representing an 89% payout ratio. And that figure was in US dollars. Next company on our list today is Wesfarmers. The Perth-based conglomerate operates across diverse sectors such as retail, industrial and chemicals. Wesfarmers' share price is wobbling today. That's after a rival bid has been placed for healthcare company Australian Pharmaceutical Industries. The fresh takeover offer comes only weeks after Wesfarmers upped its bid for 100% of API shares to $1.55 of cash per share. That values the company at around $764 million. Now this morning, pharmaceutical wholesale and distribution business Sigma Healthcare posted a mostly scrip bid for 100% of API shares. This offer has an implied value of $1.57 per share, and that indicates that Sigma values API at approximately $773 million. Now, the Wesfarmers share price has spent most of the morning in the red after the news, but it has since regained some ground. The Wesfarmers share price has had a turbulent start to the week amid the emergence of a new competitor for API. Meanwhile, coming back to the financial performance, the company's revenue, excluding significant terms for the year ending 30th of June, increased 10% over the previous corresponding period, while net profit after tax edged up by 16.2%. The company's full-year fully franked dividend was $1.78 per share, and that was up 17.1% over the previous corresponding period. Now, before we look at Telstra Corporation, the Commonwealth Bank of Australia and also Fortescue Metals, let us take a small break. I'll be back soon.
Property by Kalkine. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on Kalkine TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with Kalkine.
Hello and welcome back. This is Rachel reporting live for Kalkine TV. Now, Australian telecommunications company Telstra has capabilities such as the global network, data centres and satellite services. Telstra held its T25 Investor Day with key strategic financial updates consistent with their prior expectations. Financial year 2025 expects to see strong earnings growth, implying a high degree of confidence in the outlook, given expectations for a mid-single-digit EBITDA growth per year and a similar quantum of mobile service revenue growth. During financial year 2021, the company recorded a total income of $23.1 billion, while its EBITDA was $7.6 billion. The company's net profit after tax stood at $1.9 billion. The total dividend for financial year 2021 was 16 cents per share, fully franked. Next company on our list today is the Commonwealth Bank of Australia. These are Australia's leading provider of diverse financial services. The CBA delivered a strong performance in financial year 2021, reflecting the strength of its business and the disciplined execution of its strategy. The Commonwealth Bank of Australia dividend has been fairly reliable over the years. Regulatory intervention during the COVID-19 pandemic reduced payments temporarily, but things are looking up for income-focused shareholders. The ANZ Bank has the highest dividend yield among the big four banks. Westpac is the next cab off the rank, and the Commonwealth Bank's dividend yield does compare favourably to the NAB. Commonwealth Bank is conducting an off-market buyback of up to $6 billion worth of shares in return surplus capital to investors. The bank dividend has bounced back after a subdued run-in in financial year 2020. It's not the highest yield ASX bank share on the market, but it still represents a handy payday in the current low interest rate environment. Meanwhile, the bank recorded total operating income up by 2% from the previous year. Its profit from ordinary activities after tax attributable to equity holders surged 6%. The Commonwealth Bank paid a fully franked final dividend of $2 per share, while its interim dividend was fully franked at $1.50 per share. Moving on now, Fortescue Metals, one of the leading iron ore producers in the world, has seen a positive start to the week. The BHP Group, Fortescue and Rio Tinto are all helping to drive the ASX 200 higher today after the iron ore price continued its recovery on Friday night. Now, according to Metal Bulletin, the spot benchmark iron ore price rose 2.4% a tonne. Fortescue Metals delivered a second consecutive year of record performance with a net profit after tax of that's $10.3 billion in financial year 2021, up by 117% over the previous corresponding period. Fortescue achieved the highest ever shipment of 182.2 million tonnes during financial year 2021, which did exceed its guidance. The company's total dividend per share more than doubled to $3.58 per share. Now, with that good news, it's time to wrap up today's show. I hope you found it informative. Stay tuned for more news and updates live on Kalkine TV. I'm Rachel, signing off for now.